Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today, we're going to be talking about the ES and the NQ. We're going to be talking about what they are doing intraday and how we can look for opportunities to make money off of trades, whether those trades be day trades, scalps, swing trades, by creating an understanding of where we are in the auction process and what is happening. We can get a pretty good idea of what comes next. So what do I think comes next? I am bullish. Market is open. I am bullish today, and my reason is simply because of short covering. If the market's been selling the last few days, you have a lot of participants that are short. The CPI news was not bearish. It wasn't bullish. It was completely flat. It just wasn't bearish. And so now you've got short covering. Now you've got those people who've been shorting the last few days thinking we're going to get this bad CPI print, changing their mind and recognizing they got to give up on those trades, give up on those shorts. That is forced buying. Short covering is people being forced to go long, which is bullish, right? Because if people are forced to go long, other people are going to get FOMO and they're going to chase those longs. Okay. So I would describe myself today as bullish. The only thing that would change my mind today and start to get me bearish is this node right here, this area. We'll call it between 60.58 and 60, we'll say 63. Okay. That area has been a very important area for the last few days. It is where the market found support 2 days ago. It is where the market spent the whole night, the night before last, going sideways. It was an area we played a ton of tug of war yesterday. And so to me, my conceptual idea of short covering, if we get down below this level, let's say we get below 59, well, now all of a sudden the shorts don't need to cover. And now new shorts start to pile on because it looks like we have momentum lower. So I will remain bullish today pretty much as long as we stay above this node. Okay. Now, of course, market information can always change my mind at any moment, but I feel like this market needs to cover some shorts. And so we're likely looking at a move up. My first target to the upside is 60.90. That was the base of the single prints down. That means we have an unfinished auction, unfinished business that needs finishing. And of course, if we have momentum up, that's a great place for the market to go. That's a place where buyers will be looking to take profit. That's a place where sellers will be looking to start shorting. So that's a great place to look for momentum to the upside. If we get to 60.90 today and we keep going, we punch right through it and we don't get any resistance, I'm looking to test yesterday's high at 60.98. If that doesn't flip and reverse the market back down, I'm looking to test 61.04. Okay. So I can't be sure we're going to get to, 61.04. If I was looking to take profits on a long, it would absolutely be at 60.90. But if we got new buying, I could get back into that long once again. Okay. So do I think the market is just going to open and go straight up? No, I assume we're going to spend some time going sideways and chopping around. But I think the way that all concludes is with momentum to the upside. Okay, so that being said, you guys now know my opinion of things. What do you think is going to happen? Let's find out the results of the poll. 59% of you think the market is going up, 20% think it's going sideways, and only 18% of you think the market is going to go down. That is not good for my bullish call. I really wish it was 59% of you that thought it was going to go down. But yeah, I mean, it's just the brigade is getting so smart now. You guys are spot on whenever I ask for your opinions. You're learning. So that's great. Another thing I wanted to talk about really quickly was the strange activity that we saw yesterday with the icebergs on the way down. We saw this really unusual behavior throughout the day where somebody was continuing every couple points to just take on massive, massive, massive size the whole way down. They were buying in the overnight the night before last. When the market came back down to the A period lows in the E period, they started just buying and buying and buying and buying and buying. And even after that area broke, where you would expect at the very least they'd stop buying, nope. Tens of thousands of more contracts continued to fill with icebergs as the market went lower all day. That is very unusual to see. For market participants to be able to continue to go long with that big of size all day long, and yet the market keeps going lower, means that the tail is wagging the dog. It means that the futures are not making the market move one way or another. It is, of course, the options market, right? It's the options on the stocks that are in the S&P 500. It's the options on the SPY, on the SPX, and then, of course, the options on the ES, right? All of those options, which was people making bets about CPI, were pushing the market lower. And somebody was just accumulating and accumulating and accumulating like crazy, pretty much until I think the lowest one was like right here, pretty much where the overnight low is. That was the last spot they bought. So when the market closed at the end of the day yesterday, they were in a massive loss. We were talking about in the brigade. They were probably down somewhere in the ballpark of $50 to $100 million on the accumulated longs that they got into. Well, then what happened overnight? The market went nowhere. It stayed right there. So they didn't have to take on any more risk while they were asleep. And then as soon as CPI came out this morning, boo-boo, they started taking profits once again with these very large icebergs. This time the icebergs are sells, right? Because they're getting out of those longs that they got into. And the same behavior was happening, over the last hour post CPI, where even though these massive, shorts, thousands and thousands of contracts at a time, continued to pile in here, the market kept going up. So this was, whoever did this, whatever this was, I don't know if it was a hedge on an options position or it was just a straight up trade, somebody just predicting CPI. It was just brilliantly handled. That is still happening. They are still taking profits. We are still seeing these icebergs continuing to pile on at the highs. So I have a feeling as long as we keep seeing red icebergs, which again, this is unusual. Normally, if you see a bunch of red icebergs, you expect the market to go down. But I'm saying as long as we keep going up, more red icebergs, keep going up, more red icebergs, they're still taking profits. So went from being down by probably 50 to 100 million to have at this point probably already locked in at least that much in gains, in less than 24 hours. So congratulations, person at JP Morgan or wherever. That's insane. All right, guys. So we are above the previous day's high and above the overnight high. So this is sort of the level where we want to look for the market to hold, right? Normally, I would say we don't want to pass back through the opening price, but it's right at yesterday's high. So I would say the current low, 60.72. We want the buyers to hold the market above there and continue to create momentum up. If they come back down through 72, then we're going to get some chop. I'm still bullish on the day. As I said, as long as we're above that node from yesterday, I'm still bullish on the day, but it would tell us we need chop. If they can turn this into support and they don't come back through the current low, we're looking for that continuation higher. So let's see what happens. I'm talking about an iceberg. Okay, so the ticks would tell me at this exact moment that probably we're not ready to dart up just yet, right? We still need to give some of the longs from the overnight a chance to take profits. We got to force them to take profits. So I wouldn't really trust the support until the ticks get back down to the zero line, unless there is one alternative. If we get a pop higher and then the market starts to go sideways higher, then I would get bullish. But for now, it seems like we need to spend some more time chopping around this opening price until those ticks get back down to the 0 line and the next auction begins. Good morning to Jay. Paradise. It's a great day at the big casino. Will is here. Willie T is here. Good morning to you. Cog in the house. He says live today. These are always fun. Let's see what happens. Kevin is here. Good morning to you. Billy K in the house. Arjit is with us. Welcome, Trevor. Red Pole. Good morning to you. Eben Flo is here. Nap, welcome. Sook in the house. Dennis P, he says, is a long liquidation possible? Yes. As I said, to me, the area where the buyers lose control is basically right in here, right? This is the area where we played tug of war for the last, 2 days, essentially. And so as long as we're above it, the shorts, the sellers in there, which were in control yesterday, so we know there were more sellers in this area than there were buyers, right? As long as we're above it, those sellers need to get out of their shorts. How high will they let it go? How much money are they willing to lose? If it goes here, will they cover? If not, it'll go here. Will they cover there? If not, it'll go here. And it'll keep going up until all those shorts that got in down here get out. Okay? So as long as we're above there, there's no reason to liquidate the longs. The longs are in charge. They're the ones that have the better probability of success, right? If we start to get below there, yeah, we could get a serious pullback. We could liquidate the market pretty hard. But one step at a time. Right now, we are holding the previous day's high, which is bullish to see. Didn't quite let those ticks get back to 0. So we may need a little more chop here. But I could also make an argument that they're about to make the pop pretty soon. Abu, good morning to you. Welcome. He says, what about the NQ? It's a fair question. I just drew all the levels on the ES, but let's take a look at the NQ. Okay. Uno momento, por favor. Let me just get my settings here. Yeah, the Q looks bullish too, man. So the NQ is in a very different position than the ES. The NQ is balancing at higher prices. So it is essentially just going sideways at the highs. Right? Whereas the ES is currently going down, or was as of yesterday, not anymore now that we made a higher high. But up until yesterday, we were going down with the ES, not with the NQ. We were just going sideways. And the reason we know that is because yesterday we got back into this old gap and we did not fill it. Okay? That's what we call a when what should happens doesn't. In this case, we had lower lows and lower highs and momentum to the downside, but we could not fill the gap. So what is that telling us? We don't have momentum to the downside. This was just a dip as part of balance. Okay. So the NQ is in balance right now, which is obviously less bearish than what the ES was before the market opened today. So we are basically at that balance area high as we speak. So I would use the high from 2 days ago, which literally prices at right now, 21,638. That would be my very important deal or no deal level. Once the market gets above there, if it can turn it into support, you are now breaking out of balance, which leads to excess and momentum and new all-time highs, baby. But if you fail, if you poke up there and come back down, it means you're just still in balance. So if I was trading the NQ today, I would be bullish as long as we stayed above the opening price. Because if you pass back through the opening price now, you're probably still in balance and you need to pull back down towards yesterday's lows. So both markets have momentum. Very nice. Let's see how far they can push it. Oh, and I also briefly wanted to touch upon Bitcoin. Just really quickly to mention, I was feeling a little nervous with the Bitcoin yesterday, and I'm feeling great today. So if you guys don't trade Bitcoin regularly, Bitcoin loves to respect trend lines on the daily and on the 4 hour. And they tend to be the most important sort of when a trend line breaks. That's when you know the market might have a chance to make a big move. And then you wait to see on a retest, does it become support or resistance? So you can see, like, if I zoom out here, again, I'm on daily candlesticks. You know, we had this trend line, which the market was respecting, you know, for a year. Every time it came back up, it just kept getting smacked down, smacked down, smacked down. And then in here, we finally got above it, right? Which meant we could finally get a change. And then right here, we back tested it and found support, which meant we're getting our next move up. So Bitcoin loves trend lines on the daily and on the 4 hour. We have a new trend on the daily right now, which is from this impulse move, from the move that took us from 70,000 to 90,000, that big emotional move. From there, we have this trend line. Okay. I wasn't sweating it at all on the day where it liquidated below. You can always liquidate through a trend line and come back up, and it doesn't matter, right? Who cares? If it's just a wick, you don't sweat it at all. But yesterday it was starting to look like we might be turning it into resistance on the 4 hour. And so that had me a little nervous, thinking, should I sell some corn? And this morning, feeling good. Let's switch to the 4 hour. Yeah. So we did spend a little bit of time below that trend line yesterday, but in the overnight, we got back above it. We turned it into support. So I think Bitcoin is still bullish and also heading towards all-time highs. Very nice. I like very much. Oh, man. So you say to me, you say, Charles, it's so interesting what you're talking about shorts covering, talking about this auction process, talking about recognizing levels where things change. And that's where opportunities exist if you operate on a short enough time frame. How can I learn about that? I got good news for you, curious person. I am teaching a workshop in January. I only do a couple of these a year. If you're interested, there is a link in the description. The website is markets, plural, markets and mind, singular, .com, marketsandmind.com. I teach this workshop, like I said, just a couple of times a year. It's coming up in the beginning of January. So if you are interested in joining, it is an all-encompassing course. I will teach you how to read charts. I will teach you how to understand the market and how to understand the auction process and how to recognize where are the best opportunities with the minimal risk, which is what you're always looking for as a trader. It's valuable whether you're a swing trader, a day trader, a scalper, because the time frames might be different, but the auction process is always exactly the same. So I teach that, but I also teach everything else that a lot of other people don't teach in trading. And it's all in one course. I don't make you buy like a course on psychology, a course on risk management, a course on reading candlesticks, a course on reading market profile, a course on Bookmap, like most other people do, where they make you buy thing after thing after thing. This is one purchase, one time, and it is everything you need to learn how to trade like I do. I also teach my setups, the actual setups of where I enter trades, where I put my stops, how I make those decisions, the decision-making matrix that I use intraday to decide maybe I'm bullish, but I won't actually get long, or vice versa. And then I teach risk management, which I think is the most important thing. I teach psychology. I teach mindset. Dude, this course teaches everything. It is all encompassing. And if you don't believe me, you can just head to the Google. If you come down here, if you scroll down and click on any one of these, it'll take you to our Google page and you can read the reviews. Every single one is 5 stars. And every single one says the same thing. I am blown away by how much I learned. I did not expect to learn this much. And that is the common response that I get from anyone who takes this course. They just couldn't have imagined before the course started that by the end they would have so much new knowledge to carry forward in their trading. So there is a link in the description if you're interested in joining the workshop. You can save 10%. You can save 10% by using promo code PIRATE. So there is an early bird special right now where it's already discounted. It normally costs $445. It's already discounted at $375, and you can save an additional 10% by using promo code PIRATE. So if you have been thinking about signing up for that, today is the day, my friends. Don't let that early bird special pass you by. Promo code PIRATE. All right. Enough with the ad. Let's get back to the live market. So I am looking for another dip back to the overnight high, 60.76, because we still have not gotten those ticks to the zero line. Dadao? Dabao? That's a tough name to say for a dyslexic guy like me. Dabdow. Dabdow. Thank you so much. Appreciate you. John H. is here. Hi, y'all. Oh, boy, in the house. Laura is here. Percy is with us. Good morning to you. Cog says, highly recommend Charles is an amazing mentor. Taken it twice, and it's completely changed the way I view markets. Well, there you go. If Cog liked it so much to take it twice, you'll probably love it. Jay says the NQ is going for its all-time high. Not right this minute. Oh, you're right. Oh, boy. Yeah, this is the thing about short covering, guys. Short covering is not like new buying. Short covering is emotional. People woke up this morning and panicked if they were short. And so now they are just panicking out of those shorts. Hence why we're not getting any good dips. We just continually push up, go sideways, push up, and now again go sideways, push up. That's short covering. With a little bit of FOMO, with a little chase. Nor Auto Trading in the house. Good morning to you. Nor says, Q, Nor, you missed it. So the NQ I see as a balance area. You know, we are trying to break out of that balance. Pretty much getting above 21,708 is breaking out of that balance. So we would look for some emotional short covering there and FOMO buying. We would look for the market to come back down, you know, either today or tomorrow or something like that. Test that balance area high. And then if it holds, we're looking for a huge move to the upside in the weeks ahead. I believe the term is Santa Claus rally. Jam Croissant was recently talking about the fact that if you back test the S&P 500 over the last 50 years, the most bullish time, the biggest moves to the upside is the last 2 weeks of December and the first 2 weeks of January. So if nothing else, please don't fight the momentum. If this market keeps making new all-time highs, don't you do it. Dennis P says, I took Charles's seminar in September. Anyone who doesn't do it will lose more money in their life without the knowledge than with the knowledge. That is genuinely what I believe. The $400 is worth it because it will stop you from losing $400 in trading, you know, in the future, and hopefully help you make $400,000 of profits. You know, that's the idea. Knowledge is power. So if you're trying to improve your trading without spending any money, without putting in any effort, because it's a lot of work. It's 2 weeks worth of lessons. You don't have to watch them live. You can go, you know, watch the replays anytime you want. You can watch it for up to a year later, so you can go back and review as much as you want. But you have to do it. You have to put in the work to watch all these lengthy videos that go in depth on all these, you know, complex concepts. So it ain't easy. I'm not saying it's easy, but once you have that knowledge, you have it for the rest of your life. And that's when the opportunity comes. RK says you really can't lose by buying before the news every time. I would definitely disagree with that. I've seen many CPI prints where the market liquidates. But it is a catchy phrase. I'll give you that. Sheena says, does the Market in Mind course require that you took the first course that I made, the Market Profile e-course? No. The Mastery of Markets in Mind course is all encompassing. I teach everything in one course. And it is designed, I know it sounds like I'm full of shit when I say this, but I swear to God it's true. It's designed for every level. If you're brand new to the auction process, you will learn what you need to learn. You probably won't glean everything because that's just how developing knowledge works. You need experience to fully understand things. But even if you're brand new, it is simple enough that you will learn a ton from it. But even if you've been trading, I have people reach out to me that have been trading for 20, 30 years, and they're just really frustrated with the way the market's been working lately, the last few years, and they find value in it. So there is definitely way more than $400 of value in this course, wherever you are in your learning curve. Bart says, don't forget the flows, he says. Yes, sir. The flows. Holding the Fart says, if the ticks are going down, but the price is going up or not moving, that means accumulation. So what it basically means is there is something different happening on the futures market as what is happening in the underlying shares. So the ticks represent the stocks that are in the NYSE. So if the ticks are going down, it means people are selling stocks. If the futures are going up, right, it means that people are buying futures. Well, there's arbitrage between the two. You know what I mean? So one side or the other is going to have to break and flip in reverse. Yesterday, that was the buyers that got broken, right? The ticks were going up while price was going down. And then eventually price broke through and continued lower and squeezed all those buyers. The same thing could happen here with the people selling the stocks, is that if the futures keep going up, if people keep covering shorts and FOMO buying long, then the arbitrage bots are going to start buying those shares, and it's going to force them to turn around and come right back up. So, yeah, it's just a reason to have caution. You know what I mean? Because it means one side or another is fixing to get squeezed. Not right now, but like within the next few hours. You could think about it like from the opening price, right? So from the opening bell, you know, more participants have gone long because we went up, right? So if they keep selling stocks and they keep selling stocks and they keep selling stocks, eventually the arbitrage is either going to break back through and squeeze all these buyers, or the stocks are going to start getting bought up to keep up with the futures. In which case those ticks will turn around and come right back up, just like they did yesterday in the other direction. Willie T says the course is one of many I've taken over the years. It's the best value. I don't know what buy a country mile means, but buy a country mile, it's the best value in education that I've experienced. I've paid for the course first day and many times afterwards. Appreciate you, brother. Oh, Sheena's saying if you took markets and mines in the past, should you repeat? No, I would just go back and rewatch the videos. No reason to pay for it again. I do add more and more to it each time, because I'm always trying to make it better, to learn from the questions that people ask in the previous one and then build out the next one to be a little more informative. But if you've already paid for it, you might as well just go back and rewatch the old ones. DeBow says, are you looking for any trades? There's two trades I see right now. Buying support at the overnight high, which is the first support level I have marked here. Targeting a move to the base of the single prints down. Or selling the base of the single prints down if it seems like the market is running out of steam there. So we'll talk about it when we get there, whether we're running out of steam or not. But that's the first potential, real strong resistance above. And if I were to get long at the overnight high, I would have my stop. Normally I would just be like a point below the opening price, but today I'd have to give it more breathing room than that because this is really the support in here. So if I'm going to get long at the overnight high, I have to let them come in and kind of chop in here a little bit before I get that move. Got to accept a little risk, y'all. Disclaimer, just for educational purposes only. Oh boy says Google and Meta take the SPX higher. Yeah, I don't try to worry too much about, like, a lot of people get really focused on what within the S&P 500 is making it do what, sectors or individual stocks or whatever. I just pay attention to the market as a whole. Is it going up or not? That's what I want to know. Oh boy says, are you using pivot points of any kind? That's a good question. I don't use pivot points, but I don't have a problem with pivot points. There's a member of the brigade. I don't know if he's here right now, but there's a member of the brigade that's been using pivot points for like 20 years and profitably. So yeah, there's nothing wrong with using pivot points. I just don't. There's, you get to a point where there's just too much to look at. Could I be using pivot points? Sure. Could I be using Fibonacci? Sure. Could I be using Bollinger Bands? Sure. Could I be using VWAP? Sure. But I can't look at it all. Otherwise, I'm going to just be so confused all the time by all these mixed signals. So I keep it very simple. I stay obsessed with just the market profile chart, just the price action. Where does the market go? How much time does it spend? How much volume does it bring in? Once I feel I have an understanding based on that, I double check it with the market internals or the Bookmap. So everything I use is on the screen. You can see it. And really, what I think a lot of people struggle with is like, my ability to predict what the market is going to do is not because of the tools that I use. It's not because of market profile or because of Bookmap or because of any of that. Those just happen to be the tools I chose. It's because of the effort I put in, the years of studying and analyzing and back testing and, paper trading and, journaling. And that's why I have the skill I have, not because I use market profile or anything else. But market profile just works best for me. My brain can make sense of things when I see it in a bell-shaped curve. Sook says, what convinces another dip down to the overnight high? Well, we're not going to get it now because we broke above the poor high. So the idea was a few minutes ago, we were running out of steam. The ticks were going lower. We had a poor high in the B period that often causes the market to push away. So it would have been that push away that got us back to the overnight high. And then that poor high would have been giving me the confidence to get long for that move back up. But at this point, it's too late. So now we've got our first resistance we're pushing into right here at 86. Maybe that'll be enough to get us back to the overnight high. If not, we'll head up to 60.90. Maybe that will be enough to get us back to the overnight high. Dab Dow says, can you explain the developing POC from the SVP in Bookmap? For example, when it moves up or down during the session, what does that mean? I'm not sure what you mean by from the SVP. I don't think it particularly marks a POC over here. But I can talk about the POC on the market profile. So the POC on the market profile is this little set of green letters that you see right here. It is basically where the market spent the most time closest to the center of the range. Okay. You could also use volume, wherever the market brought in the most volume, that's the VPOC. And basically what we mean when we talk about it developing throughout the day is how does that change, right? Because the point of control is essentially what we think about as like a fair price. It's a fair price to do business. The buyers aren't getting screwed. The sellers aren't getting screwed. They both have a fair chance of it working in their favor. It is a fair price to do business. Okay. So if your fair price to do business is changing, well, then your market is probably going to get further continuation in one direction or another. So if the POC, let's say, for example, we come up here and we backfill these single prints, the market gets smacked down. We spend the C period and the D period grinding around in here. And then in the D period, boop, this POC pops up to here. So it has migrated higher. That increases the odds the market will keep going higher. Okay, so you can monitor developing POCs throughout the day and recognize when they change. Okay, no resistance, no real resistance at 86. So the next stop is the single prints at 60.90. Looking for a bounce here. I don't know that we'll make it all the way back to the overnight high. I would be looking for support at this node around 82. We've got FOMO and short covering, a potent combination. So that means they don't have to have a dip to bring in buyers. They can bring in buyers by going up because you're forcing people to cover their shorts. And the more it goes up, the more people FOMO. They're like, oh my God, I have to get long. NQ is going to make a new all-time high and I'm not in a trade. So if price doesn't need to dip to bring in new buyers, it'll just keep going up because it just keeps bringing in new buyers by going up. And that's all market cares about. Market just cares about business happening. Contracts trading hands. If it can go up to get those contracts to trade hands, it'll just keep going up. If it has to pull back down to get those contracts to trade hands, it'll pull back down. I like to think about the market like it's a shark and it's just thirsty for blood every minute of every day. It's just hunting for liquidity, for contracts to trade hands. And it just goes wherever it has to go to make that happen. David says, how should single prints be seen? As support or resistance or a place to get in and target the closing of them? So yeah, support and resistance, absolutely. If it's single prints down, if the market was moving down when it created them, it's resistance. So not necessarily to a tick, but like basically the market should get to here and then run out of steam and start pulling back. And also, once you re-enter old single prints, they become a target if you're long, a target to get to backfill those single prints. It's much more common. Let me just zoom out so I can explain this to people that don't know what we're talking about. This right here is the single prints. Okay. On this particular day, the market only spent less than 30 minutes in here. So they didn't get a chance to do a lot of business. So generally speaking, once you come back up into those single prints, you are more likely to get to the base than not. Okay. So, because that's where the sellers are waiting, that's where the buyers are looking to take profit. So how do I think about single prints? On this day when they're created, okay, we have the B period, we print the C. I'm saying to myself, one, if we come back up, we're likely to backfill them. Or two, if we don't come back up, they are a sign of momentum that we're going to keep going down. Single prints or momentum. But then, I don't worry about it. We close lower. We open the next day. I'm not thinking about those single prints at all. Unless we get above the overnight high and turn it into support, then they become the target to the upside, which is exactly what happened today. And there you go. Single prints are backfilled. So again, to me, this is a place to take profits on a day trading long. Does that mean we can't keep going all the way up to 6104? Absolutely not. We can. We've got momentum. But there'll be an opportunity to re-enter at some point. If that's going to happen, this is the first potential reversal level for the market. So if I'm long from the open, I want to be taking profits now and waiting for more information to re-enter a trade. That's just my style of trading. Everyone's got to do what's right for them. Red Pole says, what happened to make me decide it's not going back to the overnight high? The ticks. Two things. There was a poor high in the B period. Okay. So that should force the market down, right? Remember, we're always asking what should happen. And then if that thing that should happen doesn't happen, we assume the opposite, right? So that poor high should have pushed the market down, but it only did it for like a minute, literally right here. Boop, boop. It pushed it down for like just a second, and then it immediately broke through. And when it did, the ticks went from being below zero to back above it. The ticks were down here, and then they popped back up. So the story I'm telling myself, the ticks don't have momentum, invalidated. That's bullish. The story I'm telling myself, we need a push away from the poor high, invalidated because it's repaired. So it's not coming back down. Those were the reasons for it to come down. So now I've got my next reason. We got to the base of the single prints. So now I would expect it to come down. If suddenly the ticks reverse back up here, I'll know I'm wrong. So you just take it one step at a time. Once again, looking for support right here around 82 for a bounce. David says, I'm asking because yesterday's price bounced off to the tick, the single prints from November 29th, made me a loss as I was targeting 60.33. Yes. So yeah, single prints are often support or resistance. Remember, most of the liquidity in the futures nowadays is computers. Like 90% of the orders in the order book right now were put there by a computer. Computers don't go by feel, right? They don't go like, I think I should go short right here. You know what I mean? They need exact, literal pieces of information that they can use to enter trades. From my experience, the single most used piece of information is highs and lows on 30-minute time frames. A high and a low on a 30-minute time frame is going to be a high and a low on an hourly time frame. It's going to be a high or a low on half the 15-minute time frames. It's going to be a high or low on the 4-hour, So the bots love a high and a low of a previous 30-minute time frame. That's where they put their orders to enter a trade. So, if a bot was long the market this morning, where is it going to take profits? It's going to look for that exact level to take profits. If a bot is looking too short today, where is it going to look to short? At that exact level. And so, yeah, they become support or resistance. For what it's worth, anytime I'm looking to take profits on a trade at the base of the single prints, I always put my take profit order about, a half a point or a tick below the entry. Because sometimes it fucks with you and it gets up and it literally reverses like one tick before the base of the single prints. And then it goes and they leave one single print behind, and it is a nightmare if you're a trader. So it's like just one less tick of profit is fine. Guarantee you lock in that trade. We got 104 people hanging out. We perfectly predicted the bullishness 1 minute into the day. We predicted the reversal at the base of the single prints, but yet we only get 34 likes. Boy, tough crowd. Tough crowd. What does it take to get a thumbs up in here? Dun, 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 dun. Like and subscribe. Core says, can you repeat that? Yeah, Core, you want to have some fun, brother? Take your YouTube window, scroll back to the very start of this live stream, and replay the first 5 minutes right now. Go back and replay what I said 5 minutes into the day right now, and then look at what the market did. And then give me that like. Give me that thumbs up, brother, because you'll know I earned it. Core says, do I use Bookmap at all? Yes, I do. I'm not using it right now because I don't need it, right? I only need Bookmap when I don't understand the price action. Right now, the price action makes perfect sense to me. It is doing exactly what I expect. Short covering, FOMO buying. So as long as it keeps doing that, short covering, FOMO buying, I know what it's doing. So there's not much I need to glean from Bookmap. I am curious if those icebergs have finally taken all their profits. Yeah, they probably have. So when you look at the Bookmap here, okay, and you see all these volume dots, you see all these green dots like this, those are the delta between buyers and sellers at that level, okay? So when you see a green color, it means there were more buyers. When you see a red color, it means there were more sellers. Okay. So when I see this right here, where we just keep getting all these green candles over and over again, or sorry, volume dots, but not very many red ones, that just tells me it's mostly short covering and FOMO buying. No one's shorting it. Not yet, anyway. Core says, did the last couple of days need Bookmap for you? Yes. And yesterday, Bookmap was majorly important. Yeah, it was really important yesterday to give us the insights that it was all a game for CPI. So like, if I didn't have Bookmap yesterday, at the end of the day, I probably would have been bearish, right? I probably would have been like, oh no, they tanked it right before CPI. So, somebody must know something. There must be some, secret society of, who are controlling the market, and they got in before CPI because they know the market's going to crash. I'd be thinking some crazy shit like that. But when I watched all day yesterday, just thousands and thousands and thousands of contracts go long, all of them with icebergs the whole way down, I knew when I went to bed last night, I should not be bearish. I should just wait for CPI, because either they were accumulating a position to take profits today, which is what I think they did, or they were hedging for a push lower that they got into their position with puts, and the futures were a hedge. So yeah, like without Bookmap, I might have gone short at the end of the day yesterday. And if you look at yesterday's closing price, that would have been a very bad decision to go short at the end of the day yesterday, because it has since then literally done nothing but go up, sideways and up. So yeah, very powerful tool. You know what I mean? And I think a lot of traders, they don't realize the power of something that keeps you out of a trade is just as important and just as valuable as something that gets you into it. Okay, so the ticks are telling us the FOMO is coming to an end, right? I don't think the buying is over for the day, but I do think we need to come back for this support. So we talked about earlier, if they can keep bringing in buyers by pushing price higher, they will keep doing that. The ticks are telling us they're not bringing in the buyers. So they probably need to dip. They need to put the market on sale to bring in those buyers. Looking for support at 81. Kurt says, does the course, he's talking about my Mastery of Markets and Minds workshop, link in the description. Does the course cover how I use Bookmap? Yes, it does. It covers, I swear to you guys, it covers everything. It covers how I read the market profile, how I read candlesticks, how I read the market internals, the Bookmap, everything. It's a lot. Okay. It's like, 10 days of 4-hour-long lessons. And they're not like this. They're not like a live stream where I'm just shooting the shit and hanging out. They are lessons. They're like college professor type of lessons, which are just dense with information. So yeah, I leave no stone unturned. Core says, laugh out loud, I'm shorting. Well, I would never tell anybody else how to trade, but I would say to me right now, I'd rather be looking to get long, looking to buy support than to start selling. Okay. If the market is going to go lower today, first it has to get through the halfback, which looks like we're going to test right now. Then it has to get back inside the overnight range. Okay. and pass through the opening price. So if I was thinking I want to make money to the downside, I'd wait until I saw those things first. Because once those things happen, yeah, I can expect a big pullback with a high probability of it actually happening. Whereas if I'm going short right now, I'm guessing. I'm guessing that that is not going to find support here or here and turn around and head back up. So I'm not saying you're wrong for going short. I'm not saying we can't run out of steam and pull back now. I'm just saying I would first want to see the support fail. And I actually think the better trade would be to buy the support. And if I get stopped out, I get stopped out. You know what I'm saying? But this market has momentum. So generally momentum doesn't just instantly come to an end. It has to kind of roll over. So it'll give you time to get into a short at some point. Might as well wait for that better probability. Okay, so now that we are in the C period, we have concluded what we call the initial balance. The initial balance is the first hour of the market's trade, or the A and B period combined. Okay, the initial balance is a really important part of the daily process that the market goes through. In the beginning of the day, everyone is getting positioned. They're either getting out of whatever trades they've been in because some change is happening today, or they're getting into trades that they want to be in throughout the day. So you often get a lot of sort of uncertainty in the first hour. But once that first hour is over, everybody's in their trades, right? So the odds that a market will be able to make a bigger move after the first hour are much better. So if you wanted to make it super simple on yourself, you could say I'm neutral inside this initial balance, bullish above, bearish below. And what I'm talking about is the odds of you being right are significantly higher if you wait for that. One more thing we teach in the Mastery of Markets and Minds workshop, the initial balance. So I will be waiting to see, do we break the high or do we break the low? Abu says, Charles, look at NQ on Bookmap and see liquidity support. Okay, let's take a look. Yeah, I don't see a lot of liquidity jumping out as support, but you know what I see a lot of liquidity jumping out as? A target to the upside, right? Yeah, I don't see a lot sitting here as support on the queue. Whoa, did you guys see that? Somebody just turned something off. Oh, they're turning it back on. Did the NQ just break the B period low? No? Huh. If you have not given me that thumbs up yet, all I got to say is, what's up, dude? Where's the thumbs? I'm over here sharing insights. I'm being totally funny and cool. And, no thumbs up from half of you. Thank you, guys. Listen, my ego needs it. I need the likes. Okay, it's how I value my own character. John H says, is the ebb and flow kind of off or real jerky? Yes, this is what I describe as short covering. It's like they don't get to naturally dip. You know what I mean? Because it's emotional. So now imagine that you got short up in here. Okay? You start feeling good. You're like, ooh, okay, yeah. I'm short. This is great. Market's going down. I'm the king of the world. And then they can't even get back to the halfback and they start coming back up. What are you going to do? Oh, no. Let me lock in my profits. And Zoltan says, I did not place any trades yet. After watching this chat, in the past, I always have a position before 9:30. Yeah, I mean, I'm glad to hear that. I think getting a position before 9:30, unless you're, specifically trading the overnight market, is always a bad idea because you never know when that opening bell rings what's going to happen. But a day like today where you get momentum right away, there are opportunities within that first half an hour. Once we got above the previous day's high and turned it into support. But I think too many traders think they can guess. They think that becoming a profitable trader, becoming a successful trader is about learning to guess really well what the market is going to do. And they think, I'll just guess it's going to go up or it's going to go down and I'll get in a trade. And oh, who cares? I'm only risking a few points or whatever. And then they think like, if I keep doing this, I'll get better and better at it. And I'll be really good at guessing in the future. But what they don't understand is that works if you're in 90% of things in life. You could do that. You could just purely get better by doing it. If you just keep doing it and doing it and doing it, you'll get better. But unfortunately, trading is much more like a sport, right? It's an ever-changing environment. So, a basketball player can't guess what his opponent is going to do. He has to watch every single move that guy makes. Where are his shoulders turning? Where are his eyes looking? Is he dribbling? Is he holding the ball, getting ready to pass? They have to be observing in real time what is happening every moment because it can change at any moment. It's completely random. The outcomes are completely random. That's the way trading works. So in the world of trading, if all you're doing is kind of guessing and throwing in trades, you're never going to actually get any better because the game is changing all the time. So what you have to have is a framework of statistical probabilities, something that works most of the time, and then you take those trades. Those trades inevitably will work most of the time because the thing you're trading works most of the time. And when it stops working, you'll know. It won't be random. You'll recognize, wait a minute, this used to work and now it's not. Something has changed. And that's the only way you can be profitable consistently. There's tons of people who sign up for a brokerage account, trade for a few months, make tons of money, feel like they're the king of the world, and then they give it all back 6 months later. You know what I mean? That's a very common story. If you want to be able to keep it 6 months and get more and get more and get more for years and years and years to come, you have got to learn to trade probabilities, not guess, not gamble. You want to be the casino who has a statistical guarantee of success, not the gambler who is chasing the emotional high of getting rich quick. It's called Thinking in Probabilities, and it is covered in my course, y'all. Just saying. Just saying. Jay says, no slam dunk in trading. Man, no, there's definitely slam dunks in trading, but you would have to know if a player is inside the key and all the other players, all the opponents are behind him, then there's a statistical probability that he's going to dunk, right? It's like you have to see the things line up and know what are the greatest odds of this thing happening. Instead of just saying, I'm guessing that guy's going to go dunk, which would not work if you did it over a long enough period of time. All right, so I'm putting up the bullish banner here. I'm feeling bullish. I'm feeling like this market wants to get continuation to the upside. Now, there are mixed signals. There are things that are making me feel cautious. For one, the ticks have had a very hard time for the last hour staying above the zero line. The market can't keep going up all day if they keep selling stocks. Okay? The arbitrage, we talked about this earlier. One of the two sides is going to win. The people buying the futures are going to force the stocks to follow through arbitrage, or the selling of the stocks is going to force the futures to follow because of arbitrage. So it is not bullish to see the ticks look like this. But price action is very bullish. We continue to push higher. We continue to bring in new buyers, and that it will shock you how far they can keep that going, how far they can push it when they have that momentum. So I am bullish right now. My assumption is the market is going to come up here and it's going to get above this B period high and start one-time framing. If not, if these ticks stay below the zero line and price starts coming back down, I will change my mind. Okay. But for now, I think the next move is to the upside. Kirk says, do you find neutral days hard to trade? Yesterday, I had 2 trades for the initial balance long, got stopped out, and then went neutral. Any ideas on how to predict neutral days? Well, I assume by neutral, you mean choppy sideways days, days where the market just kind of grinds around in a range. There are ways to predict it. It's kind of a little more complicated than I like to go into right now. You should take my course. But basically it has to do with where are we on a daily context? Are we inside the previous day's range or not? Right. And it has to do with tempo and volume, right? What's happening with volume at the upper and lower end of the range? What's happening with the tempo? That kind of gives you an idea that the market is balancing, or chopping around. Do I find it harder to trade? No. One thing that I like about my system is I have designed it so I can trade in any market. Sometimes that means taking no trades, right? If it's a choppy sideways market where I don't feel I have any confidence or understanding, I just don't take trades that day. And that's fine with me because I'll take trades the next day or the day after when there's a trend. So no, it doesn't bother me, but it is very boring. And I don't like it for that. It's fine in terms of P&L, but it does drive me crazy when it just chops and chops and chops because I'm just bored. I just want it to do something. Frito says, if we break the base of those single prints down, which is the current high, and get to 92, we should take out the high of the day from Monday. After that, who the F knows? I can get behind that 80%. I still think there's a little bit of an opportunity for resistance, like I have marked up here. Looking at that cumulative volume at 93 and 96, that might, cause us to grind for a while to get through it, especially with these ticks looking the way they're looking. But we'll see. We'll take it one tick at a time. We'll see what happens. Of course, if we get new buying up here, in the 90s, well, then, yeah, the next target is 6104, which is well through that high. But I want to see what happens when we get there. I'm not convinced till these ticks can hold the zero line that it could be a huge day to the upside. Dab Dow says, I really struggle in trending days because I get scared that once I get in, it is going to pull back. That's a great observation to make about yourself. It is the reason why trend days go on as long as they do, because, the market pushes higher, comes back down just a little bit, and then starts pushing higher. And anyone who was too scared to get in, they start feeling like they have to chase price, and it just keeps doing that. And they just keep chasing price all day long. You also get shorts who are convinced it has to flip. They keep getting short. They get nothing for it. They get squeezed, and you get another move up. They get short. They get nothing for it. They get squeezed. And so that's what causes trends. You're not the only one, my friend. That's what's happening to everyone. So what I would say is a great starting point is step one, come up with a system to tell you when the market is trending, right? So you have some sort of system that you create. Maybe you're using 5-minute candles. Maybe you're using whatever, right? For me, that system is the break of the initial balance. So if right now the C period breaks above the B period high, I'm going to call that a trend to the upside. Now, I don't know if it's going to trend all day or trend for 5 minutes, but I will call that a trend to the upside. So at that moment, once I have my set of rules for how I organize the market's information, and my set of rules tell me the market is trending, then I must switch my system for trading it, right? I must say to myself, okay, this is not a balancing market anymore. This is a trending market. What's my system for entering, trend trades? Now, if you find that you are too afraid to enter trend trades right away, because unfortunately that's the nature of a trend. You got to get in the trade soon. You got to get in the trade quick and be one of the first people in it, because the more it goes, the worse your odds are, right? The more that continues to trend higher, the worse and worse the chances are for the buyers. So no matter what, you don't want to be chasing at the end of the day. So you got to get in pretty early on. But if you just can't do it, if it just doesn't match your personality, then what my opinion would be is look for what would be the most extreme possible dip that you think the market could make and still be trending, and then just go long there. And so then in that situation, you won't lose money, right? Or you won't lose a lot of money. So I'll give you an example with today's market. Let's say the C period pops up and it starts one time framing higher. And you're saying to yourself, okay, now the market is trending. I'm going to take trend trades. I can't trade, just jump in real quick. So I'm going to have to wait for a dip. What is the lowest possible dip that the market could make and still be trending by my definition? Well, for me, I use what's called one time framing. So once the C gets above the B, we are now one time framing. From that point on, the C low must stay above the B low. So I could say to myself, in my hypothetical here, the market is all the way up here. Okay, we're trending higher. I could say to myself, I can go long down here, right at the B period low. And I don't have to take a lot of risk. I only got to risk a point or two. I can have a real tight stop if I get in down here. Okay, so the market's up here. Now, one of two things is going to happen from that point. One of three things is going to happen from that point. Okay? One, the market never comes back down. It just keeps going up. No problem. I say to myself, no worries, right? I did not lose any money. My goal as a trader is just to protect my capital. By having this rule, by waiting for one time framing, by getting in at the lowest risk opportunity, I am not losing any money. And that's all I care about. Okay, so that's scenario number one. I just don't get a trade and it runs away without me. No worries. I'll get in the next trend trade. Maybe it's tomorrow. I'll get in a trade and make lots of money, right? Or the market comes down, it fills my order, and then the trade works. And then I feel like a genius. And oh my God, I'm so smart. Look at me. I got a perfect entry. And now I got the momentum and I'm feeling good. Or the third thing could happen, which is the market could come back down and it could stop me out. Boop. And it stops me out. But it only stopped me out for a few points. I wasn't chasing it up here and then getting stopped out for, 12 points, right? I was getting stopped out for 2 points. And if you as a trader can't handle getting stopped out from 2 points, you shouldn't be trading, plain and simple, right? You either don't have the psychological ability to trade, you don't have the risk appetite to trade, or you're trading with too big a size and you need to size down. If you're trading with an ES contract, maybe start trading with an MES contract. You know what I'm saying? Like size down to where losing a few ticks won't hurt you. It won't feel bad. And so if that's how you approach that trend, no matter what, you're good, right? If you miss the trade, you're good. You didn't lose any money. If you get filled, you're real good and you're making money. And if you get stopped out, you're still all good because you didn't lose that much. It was a manageable amount of loss. And then what happens is day after day after day of consistently, like we talk about perfect practice makes perfect. By forcing yourself to follow that rule every day and always trade it that way, the more you do it, your subconscious brain will begin to recognize you have nothing to be afraid of trading trends. You can trade trends great because no matter what the outcome is, you're not in any pain. It doesn't hurt you. And then it becomes easier and you get better and your skills grow. So that is the process of using probabilities to enter trades rather than emotions and gambling. Got to learn to think in probabilities. It's very important. Okay, so the tick's still struggling to stay above the zero line. So at this point, I am changing my analysis. I am still bullish, but they got to stay above the halfback. So I'm only going to remain bullish if they stay above 60, 80. If they come back through, they're going to squeeze these buyers and we are going to get a dip. So I'm still bullish, still looking to make a new high, but the buyers got to make their move here soon because time is working against them. John H., I'm sorry to pick on you. He says, price has been going in a 4-point range for 30 minutes. To me, it's time to go away and wait for another day. Easily manipulated chop going on. John, wasn't it just yesterday we made a bet about if you can sit through the chop, you'll get a bigger move later on? The thing is, I'm not guaranteeing you that, like, I felt very confident we were going to get a big move yesterday when we broke out of the chop, which is why I took that bet. Today, I don't feel that confident. We really might run out of steam pretty soon here. But every day you have to think of the market that way. So when you're feeling bored and it's chopping and you're like, fuck this, you just have to say to yourself, there is a chance that this balance could lead to a lot of momentum later on. So maybe you walk away from your computer for like an hour or two, but you want to come back and check it out because there's still opportunities today. 30 minutes of sideways doesn't mean it's going to go sideways until the close. Sometimes the opportunities require patience. Peter says, in my honest opinion, our friend needs to stay away from the market when it opens out of balance or out of range. So he's talking about if you don't like trading trends, you just shouldn't trade, when it's trending. That I disagree with. I think trading is skill development like anything else. So even if you're not good at it naturally, you can learn through practice. You make a plan ahead of time, you do it in real time, you study what you did after the fact, you learn from your mistakes, and then you do better the next day. And if you keep going like that, the day will come where you can trade trends successfully. I also don't have a problem with walking away. If you feel like I just don't like trends, they're not for me, I am a reversion to the mean trader, I only trade balance, that's fine. I'm not telling you you have to trade trends, but I do think it is possible to learn, to gain the skill. Frito says, it's just a rule of mine that if the singles are filled in, they tend to go to the high of the day. I've never observed that. I'll keep it on my radar. John says, this is true, but market feel is a thing. Oh yeah, market feel is definitely a thing. I describe it as tempo, the sort of speed, the way it's moving. But that's what I'm saying is like, if it's annoying right this minute, doesn't mean there won't be great opportunities 2 hours from now, DNK says, look above and fail. Well, we haven't failed anything yet. Are you talking about the Q? Ooh. Man, tricky moment for the Q. Yes. So 2 different contexts here. Intraday context and then larger daily context. You are right. In a larger daily context, that's a look above and fail of the all-time high. But you're right now dancing on what I would call like the balance area high. So the bigger look above and fail will happen if intraday today we pull back much further. That being said, intraday today so far, what has happened? The market took out multiple previous highs and is spending time in bringing in volume above it. So there's no reason in the world it can't keep going up. But yeah, it is starting to set up for that larger look above and fail of balance if it pulls back today. I'm laser focused on that halfback for the ES. Can they hold it and get the ticks above the 0? John says, not over trading is a skill. Walking away when it doesn't feel right is a skill. Understanding your edge is a skill. I agree. I agree with all of that. I just didn't like your statement that that's it for the day. I'm more than happy for you to walk away, but maybe you put a alert, download TradingView on your phone and you can throw in alerts and just get a little bing on your phone. Maybe an alert if it breaks the B period high or if it passes back through the opening price. So no, don't sit in front of your computer and go nuts if right this minute it's not doing what you want. But I'm just saying there might be opportunities later. That's all. Dun dun. So as I said, time is not on the side of the buyers here. It is quite literally now or never. If the D starts to dip below the C, you are going to start squeezing buyers. And you're setting yourself up for a liquidation. Dun 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 dun. Dab Dow says we're stuck in the single prints. Are we? Yeah, you're right. We're a little bit lower than that, but yeah. It's all about momentum, guys. That's what we're talking about here. We had momentum from the open, which got us back to the base of those single prints. We're going to need more momentum to get the market to get its next move to the upside. And right now, that momentum isn't here right this second with this sideways chop and with these ticks going down, which they're not supposed to be doing. So, yeah. There's no momentum right now, but as long as we can hold these lows, the next break is likely to the upside. And honestly, we just need to reverse these ticks. We need those arbitrage bots to start buying stocks to catch up with the futures. John says it's consolidating in an area that price passed through multiple times. That is something that does happen. If you have areas, not always, but it's like sometimes you observe that. If you have areas with very thin liquidity, either the market just passes right back through it the next time it tests it, or it grinds and grinds and grinds and fills that in. So when you're looking at like the cumulative volume, if we zoom way out here, let me just zoom way out here. So like, for example, you had very thin volume in here. Once we got back up to it, we spent the second half of a day, an entire night grinding around in there before we were able to make our next move up. Same thing over here. Grinding, grinding, grinding. So yeah, if you have very thin areas, sometimes they spend a lot of time, but then other times you get this right here where they just boop, pop right through. So it's kind of one or the other with those low volume nodes. Dab Dow says, what do you think of a long off high of days? Do you mean going long if you get above the previous day's high? Is that what you're asking? It is always in my mind, one or the other. So my number one setup that I trade more than anything else is what I call a look above and fail, or a look above and go of the overnight high and the previous day's high. So basically, generally speaking, again, we'll zoom out for examples. Generally speaking, once you get to the overnight high or the previous day's high, you're going to get one of two things. You know what I'm saying? So, just going back like a week here, on this day, the market opened, had a bit of a dip, left behind a gap, got above the overnight high, and it was a go. Now it spent, 2 hours grinding there, which is annoying, but it was a go. So the better opportunity that day was to be long at the overnight high, right? Well, then let's take a look at the next day. The next day, the market came, actually, that was just too choppy for the overnight range. So let's look at the previous day's high. You get above that previous day's high, what happens? Well, you don't chop and grind and keep bringing in volume like you did right here. You taper off. Less volume and less time up there. Look at that. Less and less volume, the higher you go. So once you get above it and come back down and you're back inside this range, that's a look above and fail. So that tells you that you want to be getting short. Well, look what happened by the end of the day. Spike down. Okay. So the previous day's high or the overnight high, and you just kind of take it day by day because they're all different. Like on this day, I'm not really thinking about this high because we've got a gap up. Right? I'm thinking about the overnight high and the overnight. But one of the two, either the overnight high or the previous regular trading hours high, is almost always either it continues higher or it fails and comes back lower. So they are great opportunities for trades. The only downside is sometimes it chops and grinds and chops and grinds, and you got to kind of take the pain for a little bit before it makes that move. But I'm telling you, it almost always makes a move one way or the other. It fails and comes back in, or it breaks and goes higher. Of course, I teach that in my Markets and Minds workshop. I know you're sick of hearing it. I just want you guys to come. I just think if you're willing to give me $400, I can help you. I can save you from losing $400 in the market. And I'd much rather do that. Basil says, how long is your cumulative volume for? Okay, so I don't have an exact amount of time that I use. I think right now I have it at like 190 days. Ooh, 390 days. Oh boy. But it's essentially the way I think about it is I just want to know, what did the market do the last time it traded in this range? So if I'm looking at it like this, okay, when we're in here at all-time highs, I don't need that much to go back because there's nothing there. But as soon as we start to dip lower, well, now I need this much cumulative volume to understand what happened when we were here. And if we dip lower again, well, now I need this much cumulative volume to understand what we did when we were in here, and so on and so forth. So it's really just depending on where price currently is, how far back do you have to go to get the data for what happened when we were there? You know what I mean? So I have it set at 390 right now, which is probably way more than I need. I could probably just be using the last month's worth at this point, but who wants to fuss with the settings constantly? My computer can handle it. It can, keep track of all that data all day, every day. Dab Dow says high of day today. No, that's not a good long. At that point, you may have missed it. I've already said multiple times, we could run out of steam right here. That might be it. That might be the full move of the day. It might be right here. I'm not saying it is, right? I always have to monitor because I can't predict the future. But there's a chance we run out of steam there. So if you're asking yourself, I want to get long the market, should I get long here? Or should I get long on a dip in support where all the volume is? The answer is you should buy the dip, not try to buy on the breakout. Now, if the market breaks the high and it pushes up here and it starts spending time and volume up here and you're convinced it's going to keep going, then yes, that B period high can be a good spot to buy a dip looking for support. But right now at this moment, we don't know if that's going to happen. We don't know if we're going to get new buying up here or we're going to instantly shit and come right back down. So I wouldn't want to be getting in a trade where my potential profit is just a few points with massive risk, you know? It's a common problem that traders have. They don't trust buying the dips. So the market comes up to that B period high and then they're like, oh shit, I got to get long. And everybody tries to go long right here. And that is just food for the shark that is called the market, because all it has to do is come back down and it stops all those traders out. So it's better to buy in pain, right? You go long when everybody else is convinced the market is going to go down. You buy fear. And then you take profits when everybody else gets greedy and starts thinking, oh, look, it's going to go. So you have to go the opposite of your emotions. Wanting to buy the high once we get up there is wanting to make it easier for you emotionally, but that does not improve your statistical probabilities of success. And it certainly does not improve your risk to reward ratio. Part of trading is taking pain, doing what doesn't feel good, because it is statistically the better choice. Sky Guy, how about a Christmas half price sale? I mean, it's pretty close. We're pretty close, man. It's like 35% off if you buy it now with the promo code Pirate. Let's find out. Yeah, I mean, it's $337. So you're saving over $100 if you buy it. It's not quite 50% off, but you're saving over $100 if you buy it now using promo code PIRATE. But will I give you 50% off? No, I will not. Just because I've put too much work into this course, and not even just over the last year and a half building out the course, but over the 2 weeks that I'm teaching it, it is absolutely exhausting to me. Like, the amount of effort that I put into these lectures is insane. On top of that, I take a break from trading during those 2 weeks. So I have to be able to make enough income from the sales to justify taking 2 weeks off of trading, because I pay my bills from trading. I pay my rent from trading. So if I take 2 weeks off to help other traders improve their skills, I have to be compensated for it, or I won't be able to keep doing it for years and years, which is what I want. He says, bah humbug. Scrooge over here. Design Knob says that the Russell and the Dow look ill. Say it ain't so. That could explain the ticks. Yeah. So the Russell got to look above and fail the previous day's high, which is bearish. See, they got above the previous day's high and they couldn't keep it going and they came back in. So yeah, that is bearish to see. And that explains those nasty looking ticks. But what if, just what if, people keep buying call options and they keep going long the futures and they keep buying Apple or whatever, and it keeps pushing the S&P 500 and the Nasdaq up? Some of those stocks in the Russell are going to get arbitraged as well. So I think we're in a little tug of war moment between the markets, and we'll just wait patiently for it to break. It'll break one way or t'other, and then there will be great opportunities. Yeah, this is a huge divergence between price action and internals. Internals look really bearish across the boards, but price looks great to break higher. It's just one of those days. One of these two sides is going to be wrong. Either the people selling the Russell or the people buying the ES. Someone's going to get squeezed. Basil says, since today's value is higher, doesn't that give a higher probability that it will go up today? No, it does not. Not from where it is, right? But what that does improve the odds are that we won't make a lower low tomorrow, right? So when we're talking about value and the way we use value to read the market, when you have a trend in value, you assume it's going to keep going up. So when this day's value was higher than the previous day, you assume the next day it's going to keep going up. When this day's value was above the previous day, you assume the next day it's going to keep going up, right? When this day is lower than the previous day, well, now you're like, okay, I don't know. Maybe it's going to pull back. Maybe it's going to go sideways, but it's probably done going up for the moment. I think this was Thanksgiving. So then you start going higher. Again, you have value higher. So now you expect it to go up the next day. Value overlapping to lower. So you're like, I don't know. Okay. Then you get value higher. You expect it to go up the next day. It goes higher. It kind of goes sideways a little bit higher. Then you get your pullback. Well, now, oops. Now all of a sudden you get a dip and value is lower. So that tells you there's a higher probability you're going lower the next day. And so then you get a move lower the next day. Well, now today you've got value higher. So all that means is there's a higher probability we're going to go up tomorrow. Okay. Now, if tomorrow comes and we pull back down, well, then we're in balance. We're just not trending. And when you're in balance, you get higher, lower, higher, lower, higher, lower. It's all over the place like this. Higher, 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 lower, lower, higher, right? That's a market imbalance over a week. So value being higher today doesn't mean price has to keep going higher today. It just means price probably isn't going lower. That's all. As Jim Dalton says, we trade value, not price. What so few understand about markets is that the price moving up and down doesn't mean a single thing. It does not mean the market is going to keep going up or down. A lot of times, if the market wants to go down, first it goes up. A lot of times the market has to rally before it can break. So if they want to come back down through the opening price today, they couldn't do it in the C period. They couldn't do it in the B period. So now what they will probably have to do is poke up, get all those people chasing up here, chasing the longs, FOMOing in, squeeze those FOMO traders, right? Turn around and come back in and squeeze them. That'll create the momentum to get back through the open, right? So price going up doesn't mean the market's going to keep going up. It could mean the market's going to turn around and go down. So we don't want to pay too much attention to price in that way. But value, which represents 70% of the day's trade, and obviously we're measuring this by the end of the day, right? Right now, it doesn't really matter because we're only 2 hours into the day. But, by the end of the day, 70% of that trade, that is hard to move. It is not easy. It's very easy to poke price up and pull it right back down. It is not easy to poke value up and pull it back down. So you can put more sort of confidence in value than you can price. Guys, all of this is in my Markets and Minds workshop. I don't know why you're not just signing up right now. That's what I would do if I was you. Malcolm. Indicators lead to anger. Anger leads to hate. Hate leads to the dark side. What's funny? So my wife had never watched any Star Wars movies. She's just not that big into sci-fi and stuff. So I convinced her to watch the entire arc of Star Wars, which is on Disney Plus. We watched all the movies and shows in timeline order, like in chronological order. It was so much fun. If you guys haven't done this, because for me, I always just watched, all the Star Wars stuff like when it came out. I would recommend this. If you like Star Wars, go on there. It's one of the options on Disney Plus. Like if you go in the Star Wars tab or whatever to watch it in timeline order, do it. It's awesome. Like the continuity between the stories is amazing. And it's especially because they use like the same actors in it. There's only one time where the actor changes, which is Obi-Wan Kenobi from the original 3 to when it was, what's his name? But anyway, that's the one where they don't keep the same actor, but otherwise it's like all the same actors. It's really cool. Anyway, if you're a Star Wars fan, it's worth it. Chronological order. Danny says, when you're comparing value over multiple days, can that help you with the bias for the current day? Yeah, that's what I'm trying to say. What's been happening with value is a better bias for the current day than what the price is doing at that particular moment. You know what I mean? Let me try to find an example. Let me try to find an example. Well, I mean, here's one right here from a couple of days ago. So technically, from this day to this day, value was, again, technically higher. It was technically overlapping to higher, but it was basically the same, right? It was basically value didn't change. So if you're carrying that forward to the next day, you'd be saying to yourself, I'm not going to be as bullish today. Could it keep going? Yeah, of course. It's trending. We got value higher. It could keep going, but I'm going to just not quite be as bullish because value was, the same the past 2 days. So then on this day, and again, we're looking at it in hindsight now. Imagine you're actually trading on this next day, right? The market comes down here. When the market opened, this was probably the value area right here for the first few minutes. And then the B started to come down to here. And all of a sudden that value area was lower, right? It was overlapping to lower the previous day. And then that B low broke the previous day's low. Of course, in this case, the market liquidated. But now you can say, okay, value is overlapping to lower, so I can trust momentum down more so. Trust value. The only tricky part is reading value like right now at this moment. Sometimes it changes because it changes throughout the day. There are certain signals that we look at which are called variable. Like they're constantly changing. And then there are static references that we look at where it's like once that reference is created, it never changes. So like the previous day's high, the overnight high, the opening price, those are static. Those aren't going to change, right? The low of the B period, the low of the C period, low of the D period, static, not going to change. And then there are references that are constantly changing. The halfback, the POC, the value area, right? These are things, the high of the day, whatever, right? These are things that are constantly changing. So if it is a variable signal that you're looking at, you put a little less confidence in it than one that is static because the static ones won't change and the variable ones might. But still, value is very important to keep track of. All right, guys. Well, we broke the high and we are now pushing into resistance. As I've said about 50 times, I see resistance right here at 93 and I see resistance right here at 97. I suspect we're going to have to grind to get through it. If we do, the next major target to the upside is 61.04. Again, we got to get through all this resistance. Okay. But if we do, then the next target to the upside is 61.04. The market is now one time framing higher. We talked about this earlier, right? When somebody asked about entering trades for trends. By my way of reading markets, we are now trending. This is now officially a trend day. Does that guarantee it's going to keep trending all day? Of course not, right? But I'm going to trade it as a trend. What are my rules for trading trends? First off, I never go against the trend. So I will not be shorting for any reason as long as we are above the C period low. There's no reason to short up here. The probability is against you. The probability is better that it's going to go up. So you don't want to be shorting. If you feel like it's running out of steam, you are either taking profits on a long or you are staying flat, right? You are not getting short. That's my first rule. Okay. And so what is the end of the trend? When do I know the trend is over? At whatever point today, one of the 30-minute time periods, what we call a TPO, gets below the previous time period's low by an entire point. So it can go half a point below the low, and that we won't count that if it comes to like right there. But if it goes a full point below the low, that trend is over. The market is now balancing. So we would act accordingly. Okay. So I hope you guys found some value in what I was talking about here today. I would just urge you, and I know it sounds like a sales pitch. I know it sounds like I'm trying to trick you into giving me your money, but I'm telling you, If you have lost more than $400 in your trading, let's say in the last month, okay, and you still feel like you don't really understand trading, you're still trying to figure it out, I highly recommend you take the course. It will help you to make sense of what you're seeing. I'm not saying you're going to take the course and the next day be a profitable trader. Just like I couldn't teach you how to play basketball and the next day you're going to be in the NBA. But if you don't even know how to read the market, if you don't even know how to manage your trades, how to manage your risk, how to, improve through a systematic approach, well, then you're not really working in the right direction. You're not getting any better. So, rather than giving another $400 to the market, give it to me. Let me give you all the tools you need, all the knowledge you need so that you can start to actually get better and better and better. And then you'll have no problem making back. You'll make back the $400 in a day. Somebody said it earlier. Who was it? Willie T. His first day of the workshop, he made back from a call that I made all the money that he spent on the workshop, right? That's how investing works. You risk a little money up front to get a bigger reward down the line. This education is an investment in your future as a trader. So if you are thinking about taking the workshop, again, it starts in January, first week of January. If you sign up now using promo code PIRATE, you can save 35%. So you might consider doing that. If you can't join the workshops live each day, you can always go back and watch the videos afterward. You get to watch them for up to a year, and you can always email me and ask me questions if you couldn't ask during the live course, and I'll be happy to help you there. So thank you everyone for hanging out. I love you. I appreciate you. Thank you for the 70 thumbs up. As far as I am concerned for today, as I've said, we are pushing into the first resistance now. The next one is above at 97. If we can keep one time framing, so if we can get through that resistance without making a lower low on a 30-minute time frame, I believe the target to the upside is 61.04, but we just have to wait and see. Can they keep it going? Thank you very much, and we will see members of the brigade tomorrow in the private live stream. Have a great day, everyone. Happy trading.